Apple and Facebook sinking the market big time today. Energy companies also are falling. We know about the price of oil around the world. Aaron Gibbs and Heather Zumaraga back with us as we head into the final hour of trading. All right, so, we've been here before, Aaron. We're about 120 points off the worst. It feels like there's always some sort of, whatever, a little bit of dipping around, some buying to see if it could trigger something or spark something. It seems highly unlikely today. In fact, the question is, what can turn this around since there's not a lot of big economic data out there and earnings season is over?
Yeah, we've got some retailers reporting, and it's only if we see some real positive numbers coming out of the holiday sales season that might turn things around. We might get a little bit of a Santa Claus rally maybe in December after the holidays. But right now, it really looks like investors are focusing on any negative news. And so just like today, we saw that negative news about Apple that sends the entire markets reeling.
And it wasn't news per se, right? We knew Apple suppliers were having trouble. The stock was already under pressure.
Yeah, it's really feeling like investors are looking for an excuse to go negative. And I think for us, this is just going to have to really wash out. I think it's about investors reassessing what they're willing to pay for stocks, what type of volatility they're willing to have, particularly in rising interest rates and slower growth. And eventually we'll find that bottom. I think we're getting close to it. But for now, investors want to focus on the negative headlines, and we may just be facing this for the next couple months.
There's no doubt, Heather, that all of this is happening, that good news doesn't go very far, and bad news has damning consequences. I mean, we are seeing companies that miss by a penny and give lower guidance absolutely annihilated in almost every industry. So for an investor like you, and I think for most of our audience who are longer term, how do you ride this out, and how do you understand maybe this price discovery, what it means when we come out on the other side?
Yeah, I think over the long run, look, if you have profits in the tech sector from Facebook, Amazon, Netflix, and Google, that's the easiest place to take profits. So when you ask the question, what does someone do? What do they do next as a long-term investor? People are taking profits where the money has been made in the growth and the momentum stocks. And then they're moving into consumer discretionaries or more defensive areas. Look at the 10-year Treasury today, catching a bid, back around 3%, I believe, on the 10-year. So you're seeing people flight to safety, flight to quality, McDonald's, J&J holding up better than the broader markets, because even if we do get an economic slowdown, people are still going to buy Big Macs and beer, maybe even more so.
Speaking of the 10-year, February it started going up. It wasn't at 3%, but it wrecked the market for a little while. Then it finally cracked through 3%. We were okay with it, but this last run, then we became afraid again. And now I'm hearing as yields come down, that's a bad time for the economy. So I feel like we're in a no-win situation with this 10-year bond.
Yeah, we've definitely. There have been some positive news within basically the investment grade corporates, but we're starting to see some lower cracks. And yes, again, it's a tough place to be where we're actually seeing negative days in the bond markets as well as equities.
Last week, $1.8 billion came out of corporate bonds on the high yielding, higher risk. What is that saying? Is that a warning sign about corporations and their indebtedness, or?
In general, we're seeing as investors want to take some risk off the table, just like we're seeing in the equity markets where you want to get out of your higher price stock. Also, they're not as willing to loan to these less qualified companies. And it's also partially the energy play with oil being a bigger concern. But it's just a lower risk of a lower appetite for risk.
Heather, are you sensing recession next year? Is the market telling you that yet? Or is this an adjustment mostly based on valuation and a readjustment, perhaps, of leadership?
Yeah, we are in a slower growth environment. If you look at the hedge fund managers, institutional investors are all saying, look, we're in the late cycle innings of a 9-inning game. Larry Summers, former Treasury Secretary, saying that we're in the 7th inning and there's 50% chance of recession by 2020 in the next 2 years. That's not positive. But on the other hand, you have heads of big banks like J.P. Morgan, Jamie Dimon, saying that, look, don't be so short-term focused. And yes, there are concerns over a recession over the next 2 years. But if the market's down 400 points today, we might be up at 400 points tomorrow. You don't know. Right. So I think the average investor, we want to find a bottom in this market unless you're a trader. This volatility is very unnerving. So, I think where all eyes are on two things, the Fed in December and trade.
I think people should also start looking at some of these bargains. There are a lot of names that are certainly oversold. Aaron, Heather? Thank you very
Yeah.
much.